What is up, everyone? I hope you all are doing well, positive mindset and everything. So, for tonight's class, we're going to be going over basically how to learn from mistakes, how to adjust in the process, how to use losses as motivation more so than digging yourself a hole and thinking that you're going in the wrong direction. Just like every topic, I say this every time, it probably does get boring. I try and give a different perspective on the main topic of each class. I don't want to just like, oh, here's a mistake, here's what you should learn from it. I want to break down exactly how you work your way through these issues, how to overcome them, how to recognize that you're not just going to have a mistake and it's never going to happen again. A lot of people think that, oh, this is a mistake. I can't do this again. So once I don't do that again, I'll never have that mistake. You're going to have repetition of everything: losses, wins, break even, emotions, no emotions. Everything is a repetitive process. So when learning from mistakes in trading, it's not always about red and green. There's more to it than money. I know a lot of people trade for money. That's like the main focal point. Like, money's going to give me freedom. Money's going to get rid of my debt. Money's going to get rid of the hectic in my life because then finances are taken care of better. That's all fine. But when you're breaking down mistakes in trading, it's all about before entry. It's all about during the entry. It's never about the process of I sold. Okay, what was my mistake now that I'm out of this trade? A lot of people, all they teach is where to buy, where to sell. No one talks about the emotions during a trade. No one talks about the indecisiveness before even entering the trade. Maybe you're hesitant. You don't want to trust the first ideal thought of this is the best execution I have to get in right now before it's too late. So I'm going to be trying to touch on as much as possible in the short time that we have. I do plan on staying a bit longer than I usually do for the recording, but I want to get as deep into this as we possibly can for the short time that we have. So, reviewing losses. One of the biggest things that I personally do when I lose, I'm not focused on like, damn, I lost $500, or like my plan was to only lose 200, I lost 300, like I'm pissed off. When I review losses, I'm focused on what could I have done to avoid maybe emotions during the trade, maybe avoid the end result. I don't just break down the end result and tell myself, what do I have to do to make this not happen again? A lot of the thoughts and processes we have with trading has nothing to do with a visual result. It's all emotions. It's all second guessing yourself, stuff that you can't see on paper, stuff that most people don't journal about. When you go back after reviewing losses from a mental standpoint, from an emotional standpoint, maybe just from like a second guessing, like I should have got in here, but I didn't. I got in later, then I end up biting the bullet because of it. There's so many different sides of losses people don't like to break down. So when breaking down issues that occur, it's not just about I lost, like shit, I lost. What do I do? Before entering a trade, was there a better place to get in, not just from a money perspective, emotionally, mentally? Where could I have gotten in that reduced my stress after I was already in the trade? The charts are moving up and down. I'm red, I'm back to green. Before any of that stuff occurs, where could I have improved before I ever put money into the market? Is there a better entry? Was there a better time of I need to wait and see how this occurs? Maybe the contract will get cheaper, but the chart's still going to hold in the same area, the same zone. Maybe the same consolidation is going to still be occurring 5 or 10 minutes later from when you actually wanted it, based off, oh my gosh, this is like the time I have to get in. If I don't get in now, I'm going to lose. I'm going to miss the play. No one ever talks about, okay, break down how you're feeling. A lot of people say, well, I'm not in a trade. How do I feel something? Don't ever think about, like, damn, my emotions in the trade were like this. My mental was like this. I sold for a loss and I should have kept holding it. Break down the stuff that no one sees on paper. How did you feel before entering? Before the loss even occurred, what were your thought processes before like even buying into the position or even thinking about, okay, I want to enter around this spot because of this reason? How were your emotions feeling? Was there a way to fix things from a mental standpoint before putting yourself into that position where it could go red and then you're not mentally prepared for it? So many people, they're in a trade, they're up 20%, they're back to break even. Their first thought process, and this is a lot of new traders as well, they're up 20% back to break even. And then at this point, it's like, I just want to get out with money. I don't even care if it's 20%. I don't care if it's 10%. I just want to get out. Then they go down 10% red. At this point, so many people, I don't want to sell for red. I'm just going to keep holding. When they would take a 10% gain, a 20% gain, you're putting yourself in a situation of risk to reward. If you're down in a position 10% after being up 20%, that risk to reward based off the trade moving is literally a 1 to 2. Down 10%, up 20%. If you took 20% gains one time and you took 2 losses at 10%, you would literally be a break even. A lot of people, they go down 20%, they go back to green, and they just want to get the hell out. They want to take that 10%. They just want to get out at break even, which is fine. But if you can't manage the risk and realize, what can I do to improve my entry? What can I do to make sure I'm at a spot where my risk is maybe a 10% loss, 20% loss. And if I am correct with my entry point, maybe I can go up 50%, making that risk to reward 20% stop loss, 50% gain. You're basically at a 1 to a 2.5 risk to reward. For every 2.5 losses, or like rounded up, every 3 losses, you have 1 win. You're basically barely red compared to being a 50% loss and then taking 2 trades at 20% gains. That 1 loss is going to outweigh 2 20% wins. The overall perspective, I don't care about, okay, I sold for a loss. Why? Why did I lose? Think about before you even enter a trade. How can you improve before the process even starts of the quote unquote review, the journal entry you have to do? This is what I'm always thinking about. And I'm going to bold this and underline it, make it a little bit bigger. Oh, shit. There we go. So before entry thoughts, every time I reminisce on a trade, I sit back and think about what just happened. I start journaling my emotional thoughts. I don't care about I made this much, I lost this much. How did I feel before the trade? What made me even want to consider buying into this? A lot of people, and I guarantee if you ask any new trader, why did you buy into this? They're going to have 2 out of 3 responses. It's going to be, well, I didn't want to miss the move. I didn't want to risk missing out on making money, so I wanted to buy in before it was too late. That's one response. Another response, I was following someone. They bought in, I wanted to buy in too. That's it. I had no reasoning for my personal self. The third reason, which I'm pretty sure a lot of people fall victim to this, they buy in because they're bored. They haven't made a trade all day. They don't even know what the hell they're doing. They just want to make quote unquote action. I want to make effort that I did something today. Not realizing if you don't trade, that's one of the biggest gains on the day. If you don't trade, knowing the chart's not where I want it, knowing that my system, my plan is not aligning, you don't have anything to review at that point. Literally, if you know I shouldn't be trading, or you're looking at the chart, this is not something that I need to get into. It's not who I am. This is not what I look for. You don't have anything to review about a trade. But when you review not entering a trade, you're literally telling yourself, okay, break down why I did not enter. What were my thoughts before entry that made me not want to buy into this trade? Because at that point, you learn how to contain yourself. You learn how to have patience. You learn how to appreciate no trade is the best trade. I've been preaching that statement for I don't know how many years now. And a lot of people, it's like, well, how is no trade better than me making money on a trade? So many people make money, and that trade was so stressful. It was so emotional. They were so overworked up because they were down 30%. They sold for a 20% gain, but they finished green on the day. That roller coaster in between from the buy and the sell, a journal's not going to cover that. A review is not going to cover that. That is what I like to write down. That is what I focus on the heaviest, because my emotions before entry and during the entry of a play, that's all that I care about. The whole purpose of what I try and teach people, you have to be emotionless when you are in a position. If you ever have second thoughts, if you're ever questioning why you bought into a trade, get the hell out. I don't care if you're up 40%, if you're down 30%, if you're ever questioning what's going to happen next, you were not prepared for it. And I always tell people, just sell, review, figure out what to do next time so those emotions are not involved. For me, before entry thoughts are always better than my selling thoughts afterwards. After I'm out of a play, there's nothing to review on an emotional standpoint compared to the before the entry thoughts. Usually when you have preparation prepared, you're in on the trade mentally before physically with money, You're prepared for any outcome. Red or green, you're prepared. You manage the risk based off the chart movement. Maybe you're looking at a specific level to sell for a loss. All of this comes into terms once you actually get out of the trade. After you sell, figure out, what do I have to write about? If you break down all your thoughts before entry, you literally will have nothing to journal after you sell a position. When you truly know why you buy into a position, when you truly understand, okay, this is my risk, this is my reward, you have nothing to journal at the end because you planned for it beforehand. There's no review. A lot of people have to review the sell points because maybe they never planned for it, so they sold for a 50% loss, but they prepared for a 20% loss. At that point, they're going to have to face the fact they didn't listen to themselves. They lied to who they were, breaking their own connection with discipline within themselves. No one else is causing that within you. So every time before entry, whether it's on paper, whether it's in my mind, I'm thinking about it beforehand, I'm taking notes on the chart, I'm figuring out, okay, how do I feel before I enter this trade? If I lose on this trade, am I going to be pissed off? Am I going to be upset that I missed a better point of entry compared to where I actually bought in? What is my risk? What is my reward? What do I want to see the chart do before I even buy into this thing? When you have all that figured out, nothing matters after you sell because you're prepared. Not just mentally, physically, or emotionally, but financially. You understand I could lose money. This is my risk based off the chart. If I make money, this is my risk of making money off the chart. This is my reward. All of that is before you enter the position. So going off of that topic, what can I improve on? What do you have to do to get better? When you focus on your entries, a lot of people, it's just, oh, I should have got in cheaper. I bought in at 2.5 a contract. I should have got in at 2.0. Okay, so you're focusing on this after you saw how the contract moved. Maybe you bought in at 2.5, and I'll type in some notes underneath these for you guys. So maybe, let's say you bought in at 2.5. While in the trade, it goes to 2.0. Come on. Why are you doing this to me right now? So while you're in the trade, it goes to 2.0. So you were down $50 a contract while you were in the trade. A lot of people, they don't look at where the chart was. They don't look at, okay, why did it pull back to this price based off the contract and the actual stock chart correlation. All they focus on after they enter and this happens, damn, I should have entered at 2.0. I could have got in $50 a contract cheaper. What would make you wait for that 2.0 entry? What are you really focusing on to grow that like mental standpoint of, okay, it looks good at 2.5, but the chart shows it could, like, this call entry could pull back a little bit. I may be able to get in cheaper. How can I improve on my entry? Was it the chart? Was it the setup? Did I rush my position? Were my emotions involved? This is when people don't process what happens after the trade. The biggest thing about emotions, it forces unrealistic expectations. I've had so many people ask me, how can I improve this trade? How can I do better on this trade? And a lot of you that have asked me this, you can vouch for me. One of the first things I say is, can you afford to lose everything you just put into this trade? Are you emotional before you enter the trade? Are you emotional during the trade? So many people, they will tell me, like, I'm scared. I'm in the trade. I go red. I get freaked out. I sell for a loss and the contract goes back to green. Okay, so your emotions are kicking in. How can we improve your emotions? Sizing. And I know that's the one just underneath, so I'm going to take that away. So sizing. Is it too much? Buying in a position. Was the entry rushed? All these things people don't think about until after they sell. Man, I wish I would have done this instead. Man, I sized too heavy. I shouldn't have done this. It ruined the whole day for me. Now you're going to think I got to make the money back. So many different issues are going to occur that you're not ready for. You're going to force another trade. Your emotions are kicking in. Now you're trying to size heavier on the next one because you just took a loss that went green after you sold. Now you want to chase that same position. You rush off imbalanced emotions. You rush because of what ifs, the hope of this could be the one, all this hypothetical crap. When I talk to people that are newer traders, all they want to do is make money. Teach me the secret. How do I make money? This right here is all you need to make money in the market. I don't care who you are. I don't care what you think about what I just said. If you have patience, you are never going to lose in trading. It's literally impossible. Obviously, if you oversize, you take one loss, your account's done. But when you know how to size proper, you know how to look for proper setups. If you include patience in the process, you can take one trade all week and make more money than most people that trade 2 times a day. They win on Monday 2 times, they lose all that money on Tuesday. On Wednesday they have another red day. Now they're chasing the money they've lost for Thursday to trade. If you just wait for the proper setup, you don't need a trade to make money. You're trading a chart. Patience is so difficult. I struggled with it for I don't know how many years because I was so focused on, man, I see this person making $10,000 in a day. I want to do that. So I would rush into positions thinking this is going to be the one. This is the one that will give me 500% returns. Maybe I'm already up 300%, but I want to swing it because I think it can keep going. What are you truly trading for? What are you really preparing for in the moment with this? When you don't have patience, you lose. When you don't have patience, you lose. And like I just said earlier, I don't care who thinks this is not logical. I don't care who says like you don't need patience. You just need to know when to buy in, when to sell. Knowing when to buy in is going off patience. You're letting the chart form. Patience revolves around everything with trading. I will literally sit all day, not trade one time, and I'll have people message me. You're not upset you didn't trade today? You're not upset that like you just sat there didn't do anything? I'm like, no, message 5 other people, and I guarantee 3 out of 4 of them are going to tell you I'm red on the day. Me not trading, I made more money than someone that was red. Just let that process real quick. Would you rather, like going back to my quote, no trade is the best trade? I'm not going to force anything because I want to make money. I want to feel like I did something. After all the years of me failing, being pissed off when I take a red trade I knew I should have never taken in the process, I'll sit back and just start thinking. And over the years, this is how it was for me. I'd rather not trade than sit here and make a trade forcefully and make money. Because eventually that forced trade, I may end up oversizing eventually. I may not sell when I'm supposed to. Forcing a trade, I'm going to end up being red. And then once I sell, going back up to the last thing we talked about, this is all I'm thinking about. What are my thoughts after selling? Damn, I shouldn't have oversized. Damn, I shouldn't have entered that play because I was rushing it. This is why I only focus on before entry. What am I really thinking about? What am I getting out of this trade? Is this trade worth it? If this is my only trade today, am I going to be happy with this? That patience came into play after losing thousands of dollars. And outside of the financial standpoint, patience came when I realized like when you look in the mirror and you tell yourself like you don't like I did this because it helped me a lot, but like you are a fuck up. Like you keep losing, you know why you're losing. You're not changing shit. You do the same thing every time. You force money into the market just to lose. Then when you're down on the day, you oversize to try and make that money back off of a lower percent gain. And then sure enough, the heavier you size, you can lose more in the process. My patience was horrible. Like I'd want to be in and out of a trade before the first 20 minutes. Now half the time I don't even look for a play until an hour or two after open. Because what I've learned over the years, I trade best later in the day. Many people are open traders. They trade the first hour or two and they're done. If you know that's your personality, guess what? You're prepared for who you are. Preparation is in the process of being built over time. When I didn't understand like what was my best trading strategy, where do I have to enter, where do I have to wait, what do I have to look for, I started preparing for everything and my wins went way higher. I'm not saying the amount of times I traded I won more. I took less trades, but I won more trades. So with preparation, oh geez, not this again. Aha, beat the system. With less trades, I made more money. When you tell a newer trader this, and I'm pretty sure some of you are thinking, like, how are you making more money if you're trading less? When you trade less, you're not just like, I have to repeat it twice, but when I say I trade less, I'm not really trading less. I'm just trading with a more calculated outcome. I'm processing the fact that when I trade less, I make more money. I have less losses because I'm only waiting for the stuff that I know I'm going to make a lot or I'm going to lose a little. When I would enter stuff out of the hope, out of the euphoric feeling of this could be the one, I would lose on quality setups because a pullback would get me out and then it would skyrocket. I was not prepared for the effect of what would happen after I bought into a trade. So every time before I enter, I'm going to keep scrolling back up to this. What are my thoughts before I enter this? Truly figure out if this is my only trade today, am I going to be happy? Act like you only have enough money to trade one time and see how much better you trade throughout the day. You have one trade all day. Just put that into your mindset and see how well you do over time. Because as I took less trades, say I take 5 trades on the week, and I can actually write this down as I talk. So, bro, all this tarde, bro. Come on now. I take 5 trades on the week. I lose one time. Risk to reward, or just overall win to loss ratio, I'm doing pretty damn good. But obviously, if you don't size correctly, this one loss can outweigh these 5 wins. I'm speaking on this specific example off of how you guys know who I am as a trader. I'm patient. I wait. I don't force anything. I'm very cautious with what I put my money into because I treat it like this is all I have left. I trade every time like this is my last trade ever. I want to end on a great, solid setup. I don't care about the outcome. When I truly believe in a system, I know I'm going to lose. Losses happen. You can't prevent losses. If anyone tells you I never lose, they are literally lying to you. Some people, 95% hit rate, 99% hit rate. There's no such thing as perfection in anything. It's not possible. But imagine taking another trader. They take 25 trades on the week. Let's say they lose. Let's just do the same correlation with the math on this. They lose 5 times. Going back to the same class that I taught you guys on Tuesday, so many people, they will let this number make them feel worse than having this many wins. All they care about is I lost 5 times. And then you tell them, like, but you won 25 times. Well, I had 5 losses, like that shouldn't have happened. You have to realize losses happen. And if you're upset about that, why do you care? Now dig deeper. Okay, you care about your losses. Did you oversize? Did you force the entries? Did you not sell when you wanted to originally? Did the trade go red? You sold for a loss and it went back to green. Break down each of those losses and figure out what can I do to maybe limit those? What can I do to limit my overall trades? I mean, some of these trades that you take, if you take 25 on the week, you're not going to be as focused because you're trying to get in and out. You're trying to get in and out. You just made $100, then you lost 200. Now you want to make back that $100 to be back to break even. You're trading for a result. You're not trading for the process. When I tell people about like you trade for the journey, you don't trade for the results. The journey takes you wherever your mind puts you. If you want to be successful in trading, you're going to break down every mistake. You're also going to break down every win and have a middle point. What do I have to do to make my wins increase from a number perspective and make my losses decrease on a number perspective? If you properly manage your risk, these 5 losses, along with the 1 loss on the other one, is not going to be in effect when you have 25 wins and 5 losses or 5 wins and 1 loss. Processing the overall idea is what's going to save you long term. If you get stuck up on these losses, you're going to chase back those, whether it's financial losses, the overall like win to loss perspective of a ratio. None of this matters because when you're prepared, you know you're going to lose. But what is the risk? Is it 10%? Is it 20%? Maybe you're only playing the chart and you're size light enough that wherever the chart goes and you have to sell based off a break, you're out of that play you don't even care about what you're down overall because you bought in based off the chart. You're going to sell for a profit off the chart. You're going to sell for a loss based off the chart because that is what you're prepared for. I got to bring this back up a little bit. Oh, shit. There we go. So execute to learn from mistakes. This is something, and I'm not sure. Yeah, Coco's still in here, so he'll be able to type and say that this is 100% true. I tell people this all the time. If you're just watching a damn chart and saying, oh, that's a good setup, I'll do that next time, you don't have the same emotions when you just watch a chart compared to buying in and actually experiencing the journey of that trade. Not just sitting from the sidelines. Oh, I'm gonna act like I'm in right here. I would have sold right here. That would have been a good trade. When you buy into a trade, you're gonna be emotional. You're gonna have second guessing thoughts. As you learn how to overcome that, those thoughts go away. You don't have emotions, and you learn to literally trade off what you see. Execution is literally the biggest part of learning, but you have to realize you're going to lose when you start executing. No one just comes into the game and starts making money. It's literally impossible. And if they make money right away, they're going to lose it over time. Because the same way they made fast money in the beginning, the market changes, they keep the same strategy. They're not going to make money as the market changes because they're keeping the same system, the same buy the breakout and let it run. Buy puts at the bottom, let the flush happen. That's not going to work out every time. So when you're watching without actually entering, you have no growth emotionally. Literally, if you watch a chart and say, I should have bought in here, or if I was trading for real, I'd buy in right here. Emotionally, you're not learning shit. Like you're not learning anything. When you actually buy into a trade, those emotions gets triggered. So many people, like I am 100% like on the train with paper trading is fine. But if you treat it like how it actually is, it's not real, it's fake, I can lose and it doesn't matter, you're not going to learn anything. If you treat a paper account like this is real money, this is your only shot to make money in real life, you have emotions when you enter the trade. If you can't adapt yourself into that mindset of, okay, I'm going to buy in. Oh, I'm freaking out now. I'm down 20%. I'm freaking out. That's when you start to learn. So if you can't do that with a paper account, that's not going to help you when you transition into actual money you're putting into the market. You're going to be emotional. You're going to lose. You're going to have mistakes. That's when the growth comes into play. As you're learning in the process with size and light and you're working on execution based off the chart, you just have to learn when to buy in. You need to size light. I hate when traders tell me, and I'm not going to throw this person under the bus, but when I say I'm sizing light and they're like, I'm going to take 20 contracts, 30 contracts. What are you doing for you to have that emotional stability of sizing that heavy? Outside of me saying I'm taking this trade, what do you see to make you want to size heavy? Outside of, well, I trust you. I know what you're doing. Lead me through the tunnel. Lead me to the light. If you don't know how to trade and you're just following people, when they take a loss that they can be content with, you may have oversized and realized I can't handle this loss. Then you're pissed off at that person. Then you're wishing I should have sized lighter. After a major loss, sizing light after a loss like that is not easy to do because you are focused on the loss financially of what you just took. So when you're first learning, you have to be content with you're working on execution. You're working on just buying in and trusting the chart. You're not trying to make money. The money is going to come later. Execution comes first. So many people just want to make money when they start trading. That's perfectly fine. But you need to realize mistakes happen from execution. And with those mistakes come the growth. That's what comes with the, okay, this was a mistake. I can't do this again. You just limited another mistake to happen going forward. As you execute, as you learn, you size light to avoid losing a lot of money. You're going to lose. I'm going to keep saying that over and over. You're going to lose. Everyone loses. So if you are pissed off when you lose, I'm going to scroll back up real quick. Were you prepared? Did you have a plan? What was your thoughts before your entry? Because when I lose, I'm not pissed off. I'm smiling red or green every day because I plan for the loss. I plan for whatever happens. So when I enter a trade and I tell you guys, or I tell you like, I'm sizing light, I'm holding this to zero, the money I put in, I can lose the entire position and I'm going to smile. I'm going to go about my day like I just made $100,000. I feel the same way making 2,000 or losing 2,000 because I don't play based off the result. I play off what I see and what could happen based off probability. So going off the mistakes, and I've repeated this already a few times, mistakes are what bring growth. No one learns by not executing. They visually see what they have to do, but when you actually buy into a position, you are probably going to start freaking out. You're going to realize it's like a switch that goes off. You get emotional. If you aren't emotional, you are sizing very light, and that's what you have to do to start off. Setbacks are what are mental. The mistakes are going to bring growth, and the setbacks are all mental. When you take a loss, don't like put yourself in the dirt and you're pissed off, you're upset you lost. It's going to happen every time. You learn from the losses, and that's what makes you grow moving forward. If you take a loss and just tell yourself, like, F this, F that, this, like, why did this happen? The market's always against me. Every time I enter, it goes the opposite direction. This is stupid. Figure out why it does that. The market doesn't just go one way because once one person enters that's retail. They don't care about us. They just care about what retail does when they buy. We chase breakouts. We buy the bottom. We anticipate moves. They screw us on those aspects. So why are you doing the stuff that they want us to do? There's a way to beat the system with trading. It's not hard. This is all it is right here. This word right here is all it takes. If you're patient, you understand why you're going to do something. As you execute, as you figure out what works for you, those losses are going to easily be changed into rewards and wins every time. And I'm going to go through the chat real quick to see what people were saying. So you said, I'm now journaling my exact strategies as a reminder to stick to the plan. This is so helpful to have my strategy planned out before ever entering. It eases my emotions so much. Yeah, Nora, literally, and I'm glad you said that because I feel like a lot of people, they need to hear other traders doing it than just one person. If you understand what you're getting into before buying into a position, you should not have emotions. When you have emotions after planning, you oversized, you rushed into it, you knew you shouldn't, but you thought you should because maybe you're looking at the chart and you want to buy calls. You see one massive, huge green candle, and you're telling yourself, I got to get in before it's too late. You enter, and it goes right back down. You can't let hope get in the way of growth. You can't let hope change the way logical thoughts are processed. Don't care about the outcome when your risk is managed and follow the plan. Literally, like what Ance just said, when you understand, okay, this is my risk. Okay, this is the plan. This is what I'm going to manage. This is what I'm waiting for. This is the overall outcome that can happen both ways. You don't care about what happens. When you're prepared for it, you are literally putting yourself in a position to be content, red or green. The way I look at it, it's not red or green. It's just, okay, I plan for a loss. I plan for a win. The loss just happened to be that one trade a day. When you know based off your system, every, let's say, 4 trades, you win 3 of them. Every 5 trades, you win 4 of them. Losses are going to happen, but you can't let that loss change the way you would you put yourself into another position. Don't rush into anything. Don't sit back and say, oh, this looks good, but I just lost. I'm kind of like not confident. I don't want to buy into this, even though this is what I wait for. You have to execute when your system works out. When you see it aligning, when you see it could be the one, you can't just tell yourself, well, I'm down 1,000 on the week. I don't trust myself. I'm doing horrible. I'm not going to buy in. When you see a system align, you see the chart align how you need it, you don't enter and it works out the way you thought it was, you're literally going to force another play for a system that you think, quote unquote, if you see my camera right now, you think the system's aligning because you missed the last one. False scenarios happen. You're imagining this is the same setup I just missed. This is going to work out. Analyze what you're getting into. Check other time frames. Maybe size less because your emotions kicked in. You get that euphoric feeling of this could be the one. Don't oversize because you think it's going to be that trade. Consistently sizing is what has to happen. When you learn from mistakes, growth happens. Mistakes only happen when you execute. You're never going to have a mistake if you never trade. You're going to see something and you're going to probably think, man, if I would have entered here, I would have made money. So you take that next setup. Oh, this is where I missed last time. I'm going to enter this time. You take a loss. Okay, well, how are you feeling about that now? Did you plan for it? Did you understand the process of that outcome? Do you guys have any questions or anything before I just keep rambling? Is there any personal thoughts of, okay, I take losses, I try and learn from them, but I never find that light at the end of the tunnel. I'm still losing every time. I notice what I have to change, but it's not working out in my favor. Are there any like contradictions with what I may have said? Anything at all? Chris, all that at times. So yeah, like when speaking on I messed up this way, I'm not going to do that again. Okay, I didn't do what happened to make me lose last time, but I'm still losing. There has to be something in the system that makes you lose. There has to be something to tweak. There has to be something to readjust. You're not changing anything. I love emphasizing this. Don't change a system, readjust. Just because you lose right away doesn't mean it's not going to work out. No system that someone teaches you is going to work the first time you take it. You could lose the first 20 and then realize, okay, I have to readjust this for it to work. Don't just try a system, you lose and say, this is not going to work. I need to find something else. Readjustment is so important. As you lose, you learn. And if you keep losing over and over, you have to figure out what exactly is making that outcome repeat over and over and over. Maybe the pattern you're playing is not exactly what you need. Sometimes my plan requires a pullback, how to stay patient when there's a breakout that seems like it'll never pull back. So, Nora, this is one thing that I personally am very good at, and people, I feel like they get pissed because I won't trade because of it. If like when a breakout happens, I love, let me see if I can pull up the whiteboard again. Drawings, new, perfect. So whenever a breakout happens, I'm always looking for the recontest. Like what you said, it breaks out, you want the pullback. When that pullback does not happen, I don't chase the play. I just don't trade. I sit there and I watch. So many people, when they get that breakout, I'm going to draw one real quick. So like this breakout, you're talking about a pullback. Oh, shoot, give me the square. There's a square. Like a pullback to this level right here. That's what you're talking about. If that pullback never happens, and I'm speaking on me personally, it is very difficult to do this because a lot of people, it's like, if I would have bought in at the high of the day, I could have made money because now it's way up there. And they start to see this happen. Then they're pissed off they never bought in back here. People have to realize you're not chasing a play. I always wait for a pullback. If there's never a pullback, I don't buy in. I let it go. Today was not my day. I remember I want to say it was either Tuesday or Monday. We had that massive run up. It was like 60 points to the upside. There was never a pullback. There was never a recontest. It was straight continuation. I think the 5 minute candle time frame was like all green candles. If there's never a pullback, I don't enter the play. If I miss a possible 30,000% gainer, I do not care. I only wait for those recontests. Why aren't you drawing? There you go. So that recontest never happens. I'm not upset. I'm not kicking myself in the butt because I missed it. You have to understand you don't chase what you wait for. You don't change the plan. You're readjusting. So as that breakout happens, maybe if you zoom out to like the 30 minute, the 1 hour, the 4 hour, the daily, there could be a historical level somewhere in this area, maybe a month or a year ago, that you could use as a possible pullback, even though the day of, this is the only pullback you want to see. You can't chase plays. And will there be retest always? Like what Chris said, no. So a retest is literally to limit your risk. When you buy a retest, I'm pretty sure I can, yeah, perfect. When you buy a retest, you're literally taking the fact of this. Can I type text too? Oh, beautiful. Yeah, it's perfect. So historical resistance. When this has a pullback, you're using a resistance to support flip. So when this pullback hits, you're focused on, okay, historically, which obviously it could have been 20 minutes ago, an hour ago, however long this consolidation is in this box, you're trusting the fact that this resistance is now going to flip to support if we have a pullback to that same level. So when you enter calls at this highlight on a pullback, your risk is literally, okay, this zone breaks, I'm getting the hell out. It's that small of a risk. And your upside is basically continuation of higher lows. As long as these trends stay intact, you can play those trends along with using a possible support bounce in this area. I'm always using recontest. And if there never is a recontest, I don't play it. So many people will tell you, well, how do you deal with the fact that you could have bought in at this consolidation, and if you would have chased or bought at high of the day, you would have made this much money way up here. Notice how the words I said in that sentence, you could have. Why didn't you? It's all past tense. It's all bullshit. In the moment, you're not thinking about, oh, this can go another 20 points. The main thing I'm thinking of, this could reject and go straight down to the bottom. Why am I buying calls at high of the day? Why am I buying calls at a resistance? A lot of people, breakouts is their trading style, which is fine, but that's not me. So if this breaks out, I just buy the recontest, because I'd say 9 times out of 10, when something breaks out of a zone and pulls back, the contract is cheaper on the pullback than it is right here. Every damn time. 9 out of 10 times. So I only buy pullbacks. You'll get it cheaper than where it was before the breakout. Contracts are always going to be cheaper. Time decay, intrinsic value. When a breakout happens, everyone chases calls. And when it pulls back, people get stopped out. The calls lose value because no one wants to hold a call when it just pulled back to where they bought the breakout. That's their tight stop. Our stop when we enter right here on a pullback is literally a break right underneath. We're down 10%, 20%. When you buy the consolidation and we break out on the upside, if it has one retracement back down, you're guaranteed to be red. 100% guaranteed. Yeah, adjusting, always adjust the time frames. One thing that I like to do if I'm looking at a play and I'm telling myself, like, this could be amazing. Notice the word I said, this could be. This may be a big play. What if this keeps going? I go to different time frames. I go to the 4 hour, the daily. I usually only trade above the 5 and the 15 minute. So I zoom out when I like have that hope or that future tense vocabulary in my thought process. What if? The hope of this going on. Imagine if this broke out. Imagine, hope, what if? I hate thinking that stuff. So when right away, I recognize that I'm very in tune with how I think about plays. I start to overanalyze. I try and find reasons why I should not buy in. I don't care about why I should buy in, because why you should buy in is all hope. Why I shouldn't buy in is logic. I'm restricting a possible outcome that I don't want to happen. When you're looking for that big win, all you're thinking about is what could happen, what could be possible. It's not already happened. Looking for reasons not to take a trade has already happened historically. So you have logical outcomes and reasoning behind it. What are some other low risk patterns you like to use to enter? I really like double bottoms or double tops. Haven't traded very many retests yet. So one of my favorite trades to take off of a pattern. How can I delete all this? I may just have to keep clicking back. That's going to take too long. Someone help me out. How do you delete this? Anyone know? Should I just make a whole new page? There's got to be a way to get rid of this. Kind of like highlight it all and cut it. Oh, I can do that. Oh, shit. Maybe I can't. Ah, beautiful. Yeah, and you just answered the question. But yeah, so cup and handle is my favorite pattern. So basically, charts doing whatever. I look for this right here. So we start to make bearish trends, start to hit that curl in the middle, go back to a bullish trend. Once we hit this top, we're at a resistance, the level that could not break before. Oh shit, that's fucking typo. Square. There we go. So we're back to a resistance level, which means if I enter right here, it's literally me telling myself this could break what couldn't break before. Could. It may. It's all hope. It has not happened. I'm trying to put false scenarios in my head to make me want to make money, not realizing it's dumb as hell to buy calls here because I could have bought them once the trends reverse down here. So when I play cup and handles, this is literally how I approach them. So as we have these bearish trends on the downside, right here, lower highs, lower lows. On the way up, it was all bullish right here. So once those trends reverse, I know the tap out, aka as we pull back, this is not a cup yet. The cup starts to form as we hit a base around here. And once that base forms, I want to see higher highs and higher lows, aka rising wedge, trends on the upside, whatever you want to call it. Once I see the reversal, it's literally, okay, if I enter, I'm going to use circles for this now. And then I got to make this, there we go. Oh, come on. Come on, buddy, keep going. It's not going. I'm just going to circle with the color. If I enter calls right here, compared to up here, my risk is way smaller because if I am wrong down here, oh shoot, there we go. If I'm wrong down here, my cut is the curl. Look how low risk that is. And then if I'm right, which I'm not saying I am, but when this pattern forms, the risk to reward is always in your favor if you catch it in the moment. As these trends form, you're trusting the system of the chart setup, whether you use indicators, whatever the case may be. For me, I like to use the EMA 9, 21, and the 55. This is my little system that I use. So as these trends switch to bullish, when I enter right here, my risk is the low on this cup. If I enter calls up here, logical thinking, okay, we rejected here before. Why should we keep going? Logically, why should we go higher? Most cup and handles have a pullback. It goes a little something like this. Then boom, it takes off. Why does it have that momentum? This pullback that happens stops out everyone that chases at the high, the breakout, the resistance that could send us to the next point. That is why these happen. It's consolidation, it's chop, imbalance to throw off retail. I wait for the reversal. Once I see that happen, and I use my little EMA system that I like to use, I'm in when most people are selling their calls from back here. They see the downside. Oh, it could come back. It could come back. It's zoning. They can't handle the hold. They sell for a loss. Then it starts to curl. I'll gladly buy them when they sell. Gladly. Because when I enter here, if I'm wrong, my sell's right here. 15%, 20%, maybe even less than that. If I'm right and this continuation happens, once we hit this resistance, it depends on the time of the day you buy, how much time you have on the expiration for the contracts, but you are more than likely at a like 1-to-5 ratio, aka you lose 10%, you make 50%. That is why I like this setup. When I see bearish, I don't go for puts, because if you look at the historical levels, are we still holding this this support right here? Come on, why aren't you going? There we go. This support right here, are we going to hold if we pull back to it? Are we going to hold this support if we pull back to it? There's more levels on the downside to bring it back up than there are levels rejecting it to bring it down, because at the point, this is high of the day. So anything above is all hope. There's no logic behind how much higher we can go unless you check the day before, the month before. But on the day of, this is high of the day right here. So when this is high of the day, all we have in our mind is how much higher can we go? What if we go higher? What if I miss the breakout? It's all improper grammar. It's all stupid stuff you put into your head. So once this pullback happens, a lot of people think I got to get puts. I got to get puts. Use the levels back here as support. levels that couldn't break, that pullback to now support. As this curls, your risk is so minimal if you buy calls. Worst thing that happens, you buy in right here, it drops, you sell right away. You buy calls up here, it drops. Now you're telling yourself, well, technically we can still hold because we have all this momentum down here to bring it up with buying pressure. What if this fails and we just drop? You're down 50%, 60%, maybe even more than that. So I always buy with the anticipation of a setup, not my mindset, what I see on the chart. And this is very unorganized, so I apologize for that. I'm actually going to cut a few of these things out. Buying breakouts is all emotions. It's all hypotheticals. If that's your system, that's fine. I'm not bashing anyone that does that. But for me and what I do, for my emotions, that when I go back and review trades, if I ever buy at a high like this this double top is high of the day. If I buy calls here and we go right back down, when I go to journal, I literally get pissed off at myself. Not because I lost, but because I did the one thing I don't do. I bought high of the day hoping for more. What if this goes higher? I can't miss the breakout. I readjusted my thought process to buy in. I buy when retail is freaking out, and I sell when retail wants to chase. It's that simple. So when a setup like this occurs with a cup and handle, my risk is small because I'm entering when the trends reverse back to what I need. I'm not buying calls like, oh, it could bounce here. Oh, it could bounce here. I wait for the trends from bearish to switch back to bullish after finding a nice support zone of consolidation. Because once this reversal hits and we start to catch momentum, guess who comes into the picture after they see a visual of what could happen, of what could be a huge move? Retail starts to chase all throughout here. And once that breakout does happen, if I take this away, I put my stop loss at this break right here. If we break back under a resistance to support flip, that is where I sell. So if we pull back and we bounce back off this and go right back up, I'm not freaking out because my entry is down here. At the point, resistance on the day is now a support zone. I can let this trade ride out. No emotions. I'm not freaking out because my sell point is if this breaks. If this would have came back down and flushed, I would sell. Probably still green on the day, or at least on this trade. So that is one thing that I usually do for me. Have you ever shorted the top of that handle? If so, have you seen it typically play out? So I usually don't go against what I tend to look for. So when we have a cup and handle forming, I will never short what I usually look for in an actual setup. So like this resistance on top, I'm not trying to short because, oh, it could be a double top. This is a system I look for a cup and handle. Why does it not go back? There we go. I look for this as a rejection if I see trends go back to bearish. So if I got to delete this real quick. Drew that too wide. So we pull up, get the little curl going. So if we hit here and I don't enter down here, if I didn't enter because it didn't look good, it didn't show me what I needed to see, the trends were too quick for me to get a proper entry, I wait to see what happens here. If we do the whole handle and then we break out, okay, we broke out, whatever. But if I start to see, okay, we pull back, we push back up, we reject again. Now we're making a lower low. We try and push back up, we reject again. Possibly in this area, I don't want to speak on too many high-tech terms, but there could be a potential fair value gap in this area, meaning imbalance structure, reversal coming. So you're using terms, let me put what this means. You're using terms as the chart forms. You're not just hoping, oh, this could be a double top. Why should it be a double top? All you're using is a possible already rejection for a current level right now. If we hit here, we pull back, make a low, we pull back up and we hit a high right here. We're double topping again, then we pull back, making a lower low, which means trends are going back to a bearish formation. Now I wait for the highs to make lower highs. Okay, another bearish transition. At that point, the only thing that can bring this chart back to the upside is this support right here. Why the hell was there a level that just put in like that? What the fudge? Don't do this again. There we go. So if we start to make a downside, the only thing that can make this bounce is this level right here, this curl in the cup. Because everything in between, it's all continuation. There's no actual volume that will keep it at a specific level, unless like if the cup is forming and we have like one of these things. Because then we have a proper bounce that could happen on a pullback just to go right back up. So you have to know what the chart's doing. You have to understand what's really forming in the process. Because if you take puts right here and it keeps going upside, when you review this, all you're going to say is, well, I thought it was going to reject. It rejected one time. I thought it was going to happen again. There was no logical evidence or visual as to why. The trends were bullish in the moment. So if we're bullish right here, why are you buying puts? You're going against trends. You're forcing a scenario of this could be a double top. I wait until we have a proper transition back into a bearish formation. Because at that point, just like today, for example, with the chart, got puts at high of the day, we chopped around. So like we take this in a bigger perspective right here. We chopped around today. We hit high of the day. We started to pull back. We did a lot of this stuff. And then we finally hit that flush. All of this kills premiums. So you can't just expect, oh, I'm going to enter right here for puts because this chop's going to kill you. You need to wait for trends to show you a bearish formation in the process. If you have a visual and a logical reasoning, there's no emotions. You know what can happen. But if you buy puts at highs and it keeps going higher, you may not understand, okay, I have to cut here. Or why did I get puts? Now I'm stressing. I'm going to wait to see if we get a pullback to break this back underneath. Not realizing if you buy puts at the highs here, that entry is perfect, but you have to sell if it breaks out. So the risk is very small. I'm not going to put myself in that position though, because literally, if I do that, I'm not learning anything from a long-term perspective. If I enter based off, oh, we're in bullish transition, possible double top, let me get puts. If it keeps going, my review is literally going to be, I tried to fight trends. I tried to force a rejection that was not supposed to happen. And that's one thing that will come into play when you do that. Do you guys have any other quick questions before I pause the recording and take it off? Anything at all? Anything?